Good Tuesday morning, Market Chameleons. Everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the share disclaimer. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. As always, this show is for informational purposes only concerning Market Chameleon tools and products. With that, good morning, D. Everyone wants to know how you're feeling this morning.
Good. I had root canal yesterday, like an
Oof.
emergency root canal, but now it's better. Um, so pretty much better today. Thank you.
Thank you.
Yep. So let me share my screen here. Good morning, everyone. If you're joining us for the first time, Will and I would do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into the live chat on YouTube. Will's keeping an eye on it, and he will read it back to me. And to give you a couple minutes to put those questions in, we're going to start out taking a look at our pre-market report, see if we could get insights on what's going on in pre-market hours, and then we'll move on to our questions. So pre-market report, over here, you'll notice a calendar view and summary statistics for the pre-market activity on those specific dates. This allows you to just scan with your eyes and compare today's activity to the most recent history and eyeball if there's anything unusual or trend. Let's review today's activity, September 10th. Here we see we have 428 stocks trading higher, 230 stocks trading lower in the pre-market. We have 119 million shares trading on up volume, 83.7 million shares trading on down volume, and we have $2.7 billion worth of stock trading higher, $567 million worth of stock trading lower. So from this perspective, looks like trading in a pre-market hours is has a bullish bias. Sorry, has a little bit of a bullish bias. Let's scroll down a little bit. And now we get this more granular view of what's going on in pre-market hours. We see stock symbols with price and price changes and volume. We also have our most active stocks, our biggest percentage gainers and biggest percentage decliners. And down here, I see 58 stocks made it onto our biggest percentage gainers list, 35 on our largest decliners. And that also indicates a little bit of a bullish lean in the pre-market trading. So when we discuss pre-market trading, stocks in a pre-market can have very low volume, very low liquidity, and we set certain thresholds that for trading for the stock to make it onto this list. And if it meets those thresholds, it'll make it onto this list. And that could include small cap stocks, could include ETFs, it could be a leveraged product or even an inverse ETF that moves in the opposite direction of the underlying. And to narrow down this report to a smaller group of stocks, we could use our filters above. And I'm going to talk about this one filter here in my watch list. And you'll see this filter in other places on the website, which allows you to use it on other reports. And the idea there is if you save your own unique watch list, so group of stocks that you saved and gave it a name, you could use this filter to filter out and screen on this report. We're going to use this in ETF filter in our example because it's a similar concept and you'll get to see how this filter works as well. So let's click on this and you get this menu to choose from. And these are different ETFs. We're going to click on the first one, SPY. And what happened is that when you select that, the list below got filtered by stocks that are holdings in that ETF. So the concept is, well, if I had a watch list of S&P 500 companies and I used it, this is how to filter out this report. And SPY, of course, that's the S&P 500 ETF, right? So these are the holdings in there. And here we see 10 stocks made it onto our biggest percentage gainers list, 3 on the decliners. So as you could see, that's also a little bit of a bullish bias in the pre-market trading. So while we gave it a couple minutes, I think I'll take some questions now.
We did have a question pop up from Rob, who had a question yesterday that we were maybe going to tackle today, but we'll get this because it's relative to something going on tomorrow. Before we get started with the question, just a quick reminder, we have a webinar today at 2 with Interactive Brokers. I did put the link in the chat. You must register on their website. You don't have to watch it live, but they'll send you a link to watch it at your convenience. But go on and register if you want. It's concerning scanning for calendar spreads.
Yep.
So the question from Rob is, tomorrow the core inflation rate posts at 7:30 a.m. I seem to recall that there is a filter to select events as a criteria to analyze a stock or ETF movement. Would Dimitri please show where it is?
Wait, say that again?
Well, he's saying tomorrow there's a government announcement about the core inflation rate. It posts at 7:30. He then goes on to say, I seem to recall that there is a filter to select events as a criteria to analyze stock or ETF movement. Would Dimitri please show where it is?
Yeah, let me try to see. I don't know if it's for that specific event. We have that available.
Before you go, could I share my screen real quick?
Yeah. Let me see if I.
All right, one more look at the disclaimer. All right. So again, while Dimitri's looking for if something like that exists as a feature, just be all right. There you go. Here he goes.
Yeah. So the question was, if I have a particular market event, can I go back in history and see what how the stock behaved around that event? And there's a tool here, under tools. So I went to SPY under menu, and there's maybe a couple different ways. I'm trying to remember all of them, but under tools, events, if you drop down this menu, it gives you a couple different selections. So some of these are based on, let's say, largest 1-day gain, like how did the stock behave around, that or after. Some are like, here's ex-dividend dates, FOMC, GDP, consumer price index. So I'm not sure if the event Rob's referring to, if I have it in here. What was it again?
It was the CPI, I think, or core inflation
price index. Okay, so let's just do this one. So CPI, so consumer price index, and I'll say load report. And here it kind of gives us a summary of what happened on that day and what happened the previous day or the day after to get an idea how the stock behaves. So you could see here, August 14th, 12 o'clock, consumer price index came out, July 11th, consumer price index came out, and so forth. And then we kind of just look at different reference prices. So this report, it's just a template for all of them. So it always begins, 2 weeks before, right up to the event, the day of the event. You could see how it behaved and afterwards. So this part is already, predefined for the last, I think, 12 events. And here we could see, let's say, the day of the event. Well, how did the stock usually do at the open, like prior to this event? So we could look at the opening gap. So the opening gap is, well, what did SP, in this case, it's SPY. What did the SPY tend to do in the morning? So if we compared it to the previous day's close to where, right now it's pre-market, but let's say we're open historically, are people maybe doing something in the morning or tend to do something in the morning prior to this event? And we could look at the opening gap moves here. And in the last 12, we could just see what was the average. So we could see on average, if we took the average of all of them, it was plus 0.2%, indicating that in the last 12 observations, there was a little bit of a, positive or skew to those gaps, right? On average, it was positive. But, when we look at the average, it could be one really big one, that pulled up the average, like, 1.4. So below that, then we look at the number of positive moves versus the number of negatives. So we could see here that 75% of these observations were up to the positive, to the plus, 25% were down. So here it shows that the last 25 observations, at least, it tended to move, positively, on average, and the frequency of the moves. Then we could look at it. Well, what about from the opening, right? From the opening to the high of the day, like how much volatility did it have from the opening? Let's say, okay, wherever it opens, how much volatility after it opens does it experience on a day to the upside or to the downside? So then we look at the average move from the open to the high of the day. So these are the percentage moves. If we took the average, we see about 0.5%, right? If we took the average. And to the downside, what about from the open to the low? We took all these. It's also 0.5%. So there's no real overwhelming, skew there. It looks like it's just as volatile to the upside as to the downside intraday. You got like 0.5% on average. We could also look at this extreme. So if we scroll down here, we could see that the median move, which is half the moves are above this, half the moves below it, is plus 0.5% to the upside. The median move to the low is 0.4%. And we could see that the max move to the upside in these 12 observations is 0.9%. The max move to the downside is negative 1.3%, which shows you, like, on the extreme moves, based on these observations, it was a little bit less liquid to the downside. So, but it could be volatile to both sides. You got about 1% move, to each direction. From the opening to the close, so that, keep in mind, that's to the high of the day, that's to the low, but that doesn't mean that the stock finishes at the high or the low. How does it finish from the opening to the close? So how much volatility, it opens up, it trades all day, has the news, how much volatility from that opening price to the closing price? Well, if we took the simple average, just averaged out from the open to the close, we could see that it's plus 0.1%, slightly positive skew. 58% of the observations were positive, 42% negative. But what about the volatility in either direction? How much movement, does it experience from the open to the close on average? So then we take the absolute numbers, convert them all to positive numbers to take the average, because we want to see the move in either direction, the magnitude of the move. We take the average of that, we could see it's 0.4%. So from the open to the close, we get about, on average, a 0.4% move in either direction, with a high move of 0.9, low move of 0, right? And these are the max positive and max negative. So to the upside 0.8, to the downside 0.9 with a median return of 0.1. So from this, we could see that, to the close, we get about a 0.4% move, but that's if we look at the 0.5%, it actually looks like it does tend to move away from the open more often, right? So it's closer to the average high or average low move than to zero, right? So it's not unchanged. It's closer to these moves than to zero. And if we just compare it to the close of the day, we got about 0.8, 0.9% move on the extreme sides. And this gives us an idea intraday how, SPY traded when this particular event was announced, 12 o'clock. Then this concept is, to look at following this event, assuming if it was a major event, how did the stock do afterwards? And, these are the stats for it. It's up to you, though, to analyze, see how relevant it is, or, if it even, and if you see maybe something, statistically interested in, is there a reason for it too? So keep in mind, the stats may show something just by chance. And if you see something that might be interesting statistically, you still want to go and research, is there an underlying reason that might be happening, right? Because it only points to just the observations, right? This is just calculating the observations. And you would want to still go back and confirm it. So, if you, for example, if you see, prices of airlines always going up on a specific weekend, it could be by chance, or if you research it and you say, oh, wait, well, this is the weekend that, everybody has off from work, or Labor Day or something. So more people travel and it makes sense, right? Then you can find the underlying reason, and it makes sense that, yes, this is statistically significant, and the prices go up, and there's an underlying reason why it does that, because something is different on that weekend than other weekends. And keep that in mind, when you're analyzing data and information, that there is that part of aspect of the analysis you still have to do. Now, there's also intraday returns, and this gets even more granular. So keep in mind, this one looks at the data from the perspective of close to close, open to close, open to high, and so forth. But what if we wanted to look at a more granular or a compressed view? Like, what if we were looking at just like maybe the hour before and the hour after, or something like that? So, if we have those events in there, let's say, don't think I'll have to add, I might be able to add it. So I'll make a note of it. But let's say interest rate decision, right? So interest rate decision is usually around 2 o'clock, FOMC, right? Is that correct? Well, 2 o'clock.
Yep.
So let's say we wanted to see, well, what does the stock do between like 1 and 2 o'clock? So I'm going to go more granular here and say 2 p.m. and start time, let's say 1 p.m. So 1 p.m. to 2 p.m. I just want to look at that hour. And I want to look at the interest rate decision, and let's just say, the last 16 observations. Doesn't matter, day of the week, it doesn't matter, because I think it's always like on a Tuesday. But let's just say interest rate decision from 1 to 2 p.m. in SPY. So here, now we get a No, okay, so there's only two of them, right, in the last 16 weeks, I guess. So it's going back as far as 16 weeks. Let me see if I could expand it, but let's just keep it at that. So in the last two observations, we could see that on average, up or down, it moved about 0.2%, and that's the median return. And this just kind of calculates if we took the current price, what does that translate in dollar terms? So these are up or down. Then we've got the simple returns. And keep in mind, there's only two observations here in the last 16 weeks. But if we just took the simple returns and said, well, what's the average? So here we see that on average, they were down 0.2% or 0.83. All of them were down out of these two. This is the best return. The worst is 0.2. This is rounded. Average up move is 0 because out of these two, there are none. Average down move 0.2% and 100% of these two observations were down. So that's one way to get more granular. If you wanted to just do this, let's just say day of the week, maybe you really didn't care about the events. You just cared like day of the week, Monday. Like, how does Monday look like with the hours between 1 and 2? Right? Like you're interested in that for whatever reason, or you're considering doing something that's based on, those particular hour. We could pick Monday between 1 and 2. How did the stock perform last 16 weeks? So here, now we have the stats for that, right? So these are all the historical Mondays in the last 16 weeks. And this graph shows us the magnitude of the move up or down by the bars. The move to the downside is in red, the move to the upside is in green. And this is the average of all of them. So just here, we could kind of look at the distribution of those moves, and we have some big moves, we have some small moves. So if we look at that dotted average line, we see that the bars could be very far away from them. There's a lot of distribution there. We have bars that are way above that average that go over here, August 26th, September 9th, and then we have some that are way below it. So there's a wide, range around that average. There's a lot of volatility. If we looked at the absolute average moves here, we got 0.2, median 0.2. These are the simple returns, the best move to the upside, worst to the downside. This is the average up move. So when it's up, if we just took those green guys and averaged them out, it's 0.2%. When it's down, if we average them out, it's down 0.2%. So we've rounded this, but these numbers will show you the rounded. So you could see like to the downside was a little bit more volatile. If we're looking at the frequency of the moves, it's over here. 44% of them were higher, 56% were lower. So these are based on the last 16 observations. And then take away, it doesn't look like they're, as far as like frequency of moves goes, there's nothing like obvious or any trends. But as far as the volatility, we got, an average move of about 0.2%, which equates to, a little bit under $1 in terms of the last price of the stock. But you could see that even with the averages, there's a lot of variance around that average. So we gave it, I think at this point, I'm not going to move on to a different topic.
Yeah, I don't know if this is something you can show quick. I know Rob asked about volatility charts yesterday, but he was saying, this is something that he asked today, and we can pass it on until tomorrow too. just so we identify, is there a way to see how much the call at the money moved on average after the move in the stock? I.e., how does a 0.5% move in the stock transfer to at the money call? Maybe we can look at that tomorrow if you want, or do it in the next 6 minutes, but your call.
Yeah, let's do that tomorrow, Will, so because it's a new topic and I want to have enough.
Perfect. So we'll tap that onto the volatility chart question that Rob sent over. Great job as always, D. Remember, we have the webinar today, 2 p.m. The link's in the chat, and that is an IBKR sponsored webinar. So you have to go to their site to register to be able to either watch it live or get the video recap.
And
awesome job, D.
Right. And that's going to be on calendar spreads. So if you guys are interested in calendar spreads.
Calendar spreads. Awesome.
All right.
All right. Have a great day, D.
Bye.